Hello and welcome everybody to live commodity market analysis with myself, Phil Carr, at the Gold and Silver Club for the 8th of September 2016. Today we will of course be covering live market analysis. We will review a watch list of trading opportunities. We will go through an overview of the commodity markets portfolio performance. So we will cover our current open positions and also our top trades of the week. And of course, we will be answering any questions during today's session. So do make sure that any questions that you have at all, that you post those into the chat function. Okay, fantastic. So before we get started, let me introduce you to the Gold and Silver Club. The Gold and Silver Club is the world's #1 commodities trading and investment coaching company. We are regarded as the go-to authority on commodities trading. As internationally respected experts, our analysis and our opinions on the metals, the energies and the agricultural markets, they're routinely sought by major financial television channels and publications, which include Bloomberg, Reuters, CNBC, Global Banking Finance Review, the Wall Street Journal. And of course, it is a pleasure to be here today on FX Street as well. Our team of experts has trained and mentored over 100,000 private traders from all over the world to increase their wealth and generate substantial monthly income through commodities using our signature trading strategies. So for more information on the Gold and Silver Club and our expertise, please visit our website, which is at www.thegoldandsilverclub.com. Okay, fantastic. So let's get straight into it. It's been a pretty busy week this week on the commodities front. We've seen a number of big moves from gold to coffee to oil. Oil earlier on this week, we saw WTI and Brent crude oil soar over 5% in less than 1 hour as Saudi Arabia and Russia, two of the world's top oil producers, signed an agreement to stabilize oil prices at the G20 summit. Now, all eyes at the moment are on the upcoming OPEC meeting in Algeria, which is taking place between September the 26th to the 28th. And we'll have a look at that on the charts very shortly and talk you through oil. Now, coffee prices this week, as we've discussed a number of times during the weekly sessions, have now broken out significantly. We've broken out to 18-month highs. We're at the highest level since February 2015. We've seen coffee prices break out to 18-week highs here on concerns about the impact of cold temperatures and rains on crops in the top producer, Brazil. Coffee is now up over 13% in 2016, with further gains expected. And again, we'll look at that on the charts with you very shortly. As we've mentioned previously, our research does show us that hedge funds, they've continued to switch their focus to soft commodities. They've boosted bets in sugar and coffee to the highest in since 2014, the highest in over 2 years here. We've seen net long positions across soft commodities continue to gain momentum, and sugar is now up 31% in 2016. Now, we also saw gold last week. It held onto a very key area of support, which is at $1,300 per ounce. The gold price jumped up on the non-farm payrolls following on from disappointing numbers there. We saw a breakout to the upside. In fact, we've now seen gold over the last week rally just shy of 500 points here. Gold is up 27% so far this year as uncertainty over US economic growth has dampened the expectations that the Federal Reserve will raise rates later this month. So with that, we will get right into it, and I'll start off here with gold. I can already see a few questions in the chat about gold, so we'll definitely go through that. Gold, silver highs. I note your question there relating to gold. If there's any other questions on gold, do let me know. Thanks for that as well, Mauricio. Just a very quick check-in, guys, that you can all see it okay. I think you might need to do a refresh on your page if for any reason you're not seeing the live stream come up on your side. Okay, good. Right. So we'll start off here. Well, first of all, we'll have a look at gold and we will progress through the other commodity markets as well. So gold, what do you need to know at the moment? Essentially, gold right now, if you have a look at the price structure going all the way back here, we can have a look at the beginning of January this year up until the highs where we came up to 1,000 375 US dollars following on from Brexit. We can see here there is a very key underlying channel, which again did get supported on non-farm payroll. So if you can just draw that up very cleanly on your chart, if you don't have this already, it's worth adding on. Very clear channel which needs to be added to gold. Now, since that point, we've taken that opportunity from non-farm payrolls to load up on additional longs here on gold. You can see we developed a nice rejection candle at that trend line, nice pop on non-farm payrolls. And we've had a nice move high here back towards 1,350 US dollars per ounce. Now, this afternoon, watching gold very carefully here, we've got two overhead trend channels which I would bear in mind. Now, the first is the shorter term channel here, and I'm watching this to see whether this is very simply just going to be a bull flag formation. So we've had a downward trending channel which has been in place over August. We've popped above the high here. We're now retracing, and note, you want to have two channels on. Don't just have this channel here, okay? That's not enough. So you could argue, okay, we formed a rejection candle at this zone. Gold's going to pull back. It will just ricochet between 1,350, come back for a retest of 1,300. Be careful. I would suggest that gold won't go that low. At the moment, we've got underlying support, the 50-day moving average, the 21-day moving average. We've also broken above some significant resistance zones here. And if you go out to higher timeframes here on gold, it's also starting to build up a really nice base here off the back of some major Fibonacci levels. So I would keep a very close eye on gold where it is right now. This new trend channel, you can draw on, in case you don't have it already here. You can draw it on just at the lower end. You can draw it from the previous resistance channel, which is now turned into a supportive channel temporarily here. So I am watching to see over the course of the US session today. We've just had, of course, the European Central Bank interest rate decision, which has remained unchanged. Stimulus has remained unchanged. Mario Draghi has just finished speaking. And to be fair, it's not really impacted gold too much here. It's had a mini pullback at the moment, but it is being supported by a new trend channel, which is in place at the moment. So just have that in mind right now. Now, gold, I would again suggest if you're not already in a trade, you also need to be careful at these levels. We've loaded up from the 1300s, the 1320 zone, the 1330 zone, to a point now where we're in a position where we've got risk-free trades here, where we can continue to actually ride this rally for a breakout above the 1350 zone if it does get above that level. Now, gold isn't out of the woods yet. It does still need to break above resistance. It needs to break above the weekly highs. It needs to get above the 1352 zone first and foremost, which is Monday and Tuesday's highs. Monday, we got a nice pop to the upside. In fact, no, Tuesday we got the pop. Monday, we formed an inside candle. Tuesday was the good pop to the upside here. And now we need to breach above 1,352 to get an increase in momentum here, to start seeing more short covering and to get a move above the 1360 zone, which provided a lot of resistance over August. You break above that level and then we are flying, because we're only at the moment around $30 with gold, or 300 points away from 2-year highs. So I would definitely have gold on your radar at the moment. This is a major area of resistance. So what have we got coming up over this month that you need to pay attention to? Well, we've just got the European Central Bank announcement out of the way, and it's not really caused a shakeout here for gold. Gold's hardly moved, in fact, and you can see my channels are being supported at the moment. So as we go into next week, what do you need to be aware of? Well, we do have the Bank of England decision next Thursday, the 15th of September. The following week could be the big one on the 21st of September, where we have the FOMC statement, and Bank of Japan as well will be providing announcements. So could get some nice volatility on that as well. And of course, as we head towards the end of the month, we have the OPEC meetings and grain stocks USDA reports, which will be big movers. And of course, a lot of you will be aware that as we go into November, we also have elections in the USA, which is bound to cause volatility here. But overall, right now, I do like this price structure with gold. We've broken out from some key levels. We held support from non-farm payrolls, and I would like to see these levels get held here as we go into towards the end of this week. Now, right now, you can see trend channels will be sitting around the 1335 zone. It could be a good opportunity to add to a position on a retracement if gold does get down to that level. So just bear that in mind at the moment. Otherwise, if we do get a break above the weekly highs here at 1,352, I would also expect some good follow through. Now let's move it over to silver. So that is gold, but silver, quite similar in terms of its price structure right now. Now, silver, what I would bear in mind at the moment is that it has managed to get back above the 50-day moving average over the course of this week. It's a very key moving average for silver. It broke above that level, found support yesterday, found support today so far. So far since silver has entered into a bull market in 2016, where it has rallied at its most extreme, up 46%, we continue to see very little time that silver spends below the 50-day moving average before it gets back above this level. We've recently formed a V-shaped reversal pattern. For those of you who like these for a setup, this is a neckline, very clear neckline that we've got here on silver at the moment. All really silver needs to do is, it might not happen this week, but if it happens next week, here's your V-shaped reversal pattern, break the neckline. Often as you get towards the upper end of the neckline, you have a pullback, and then you set up with a breakout towards the upside. So this is what I really like on silver right now. V-shaped reversal pattern. If we can get some follow through over the course of this week into next week, pop back higher, then we're on track for breaching back above the 2016 highs. Now, it won't happen necessarily overnight. Could take a few days, could take over the next week or so to do this, but this is a very clear neckline at the moment, which I would pay attention to on silver, which is sitting at $20.15. So you break above that level, good follow through zone for silver, and I would certainly keep an eye out for that. So right now, you've also got some very key underlying channels here with silver as well, which continue to be maintained. But ultimately, right now, we continue to see investment demand into gold and silver ramp up over the course of this week. I do like the fact that we've had quite a significant move here following on from non-farm payrolls on Friday last week. We haven't seen too much of a move here following on from the European Central Bank statement today. And if we can get supported today at this level, which is 1972, which is the 50-day moving average, we get supported at this zone and we take out the weekly highs, then you're up and running. Silver is looking good for more upside. So definitely bear that in mind. Now, right now, another market which I would keep an eye on at the moment, although it's pulled back a little bit today because it broke out yesterday. In fact, it's coming back up again. This is coffee here, broke out to 18-month highs just yesterday. In fact, today as well, it closed above those levels. Now, you will recall, hopefully, that we've been talking about coffee for a while here, especially this pennant formation and also the bull flag formation that we essentially developed here in coffee. We broke out of that towards mid-August. We broke out to the upside. We also had a pennant here where the price structure got just tighter and tighter for coffee, eventually causing a breakout. Now, there's been a number of factors which have been bullish for this. Number one, we have seen investment demand increase. So we've seen steady increases from funds coming into this market. We've also had supportive weather conditions in Brazil, which have damaged some of the crops. There's less of a production at the moment, and we've seen the cold weather, additional rains in Brazil, frosts which have damaged the crops for coffee in Brazil have all had an impact on the amount of coffee available. And with that, we've started to look really good on higher time frames as well. Really nice basing formation here on coffee. This is a weekly time frame, pullback recently, almost a cup and handle formation, and we just broke the neckline yesterday. So I really like coffee here for more upside. We've got a lot of clean air here to get back up significantly higher. So coffee is really starting to get going at this point. Definitely a market you want to have on your radar. So coffee looking good here. I also like the sugar price structure at the moment as well. So if we move over to sugar, sugar broke out to 4-year highs this year. It's one of the best performing commodities in 2016, up 31%. You can see at the moment continuing to consolidate. You've got a nice little pennant formation. In fact, we broke above that level just yesterday. And right now we're sitting towards the upper end of that channel at the moment. I do like sugar as well here for more upside, especially if we just need to move $1 higher and we'll break above the 4-year highs. Then we're on track for a surge higher here, which could really give about another $2 clean air above the 21 level. So I would definitely look for that move towards 22 to 23 level at the moment. Okay, so quick question. Okay, gold, silver high. Yes, of course. So if you missed that, guys, we've just gone over gold and silver at the moment. So if for those of you who have missed that, I will come back to that very shortly at the end of today's session. So what I will just show you at the moment, so for those of you who do trade coffee or sugar here. Right now, sugar is on track for a breakout, I would suggest. We're just about coming above a pennant formation here, and where we're sat at the moment with sugar. And if you don't trade these markets, I would certainly have them on your radar, because we've seen a lot of investment demands for them, moving out of equities, moving out of Forex into soft commodities. So could actually be a good opportunity for you to take a look at these markets. Coffee at the moment broke above 18-month highs just yesterday. Sugar is getting close to its 4-year highs. Now, moving over to oil, WTI crude oil. Now, I'm watching this carefully. We have the oil inventories coming out in 90 minutes. Now, we had a huge surge earlier on this week on an agreement by Saudi Arabia and Russia, which caused this breakout to the upside. And with that, we then retraced. We've continued to consolidate. I suspect a lot of this the next move here will be based on the oil inventories, which come out in about the next hour and a half, and also the OPEC meeting, which is at the end of September. Now, for me right now, there is some clean air for a breakout. If you get above 47, you've got clean air really to take oil higher here, back towards the 49 level. I would suggest in the short term here, we could get a breakout. You've got a trend channel just overhead here, pennant formation as well. And then a move above that level, you could have a clean run up to the 49 to 50 zone. So on the bullish side, that is what I'm looking for. Obviously, if oil inventories, last week, oil inventories caused a big breakdown in price. This move that we had got to the downside last week was off the back of an oversupply. So I would suggest, although there is a setup brewing here for a breakout above the 47.15 zone, which I quite like on lower time frames as well here, you can see where this is really starting to build up for a breakout above resistance. I would just wait for the oil inventories in 1.5 hours time to come out, and then you can look essentially for a position on oil, potentially taking advantage of a breakout to the upside. Otherwise, I would be quite interested actually in a pullback back down to the 50% Fibonacci level from the recent swing low, recent swing high, brings us down to 44.50. I quite like that as a buy zone for oil here if we come back down to that level and get supported. Okay, fantastic. So just coming back to a couple of questions on gold and silver. So if you did miss that at the beginning, I will just do a quick recap for you. Okay, so gold at the moment, in fact, that's interesting. It's already starting to support the trend channel there. So going back to gold, silver highs, your questions on gold at the moment, view on gold, short-term gold, long-term view. Have a look at gold right now. What you want to do is have these trend channels. Don't miss out on having these zones on your chart, okay? So you want to bear in mind, a lot of traders at the moment, I've seen they've had the incorrect channels. They're putting in this channel at the moment on gold. You can put this on, but you also need to bear in mind that gold right now has broken out of a channel. You want to take into account the beginning of August highs here. Take these down on the chart, which is you can meet the price a lot of times over the month of August. We've broken out of that channel and we're finding support. Really important, because yesterday we came down for a retest. It's a previous resistance channel which is turning into a supportive channel, and this could be a slingshot move for gold here. Gold's hardly moved on the ECB decision today. Interest rate decision unchanged. Stimulus has been unchanged. And gold right now, if it can breach above the 1352 zone, we've got clean air to start breaking back up to 1360. You take out 1360, and then we are only 150 points away, or $15 move away from the 2-year highs here of gold that we reached after Brexit. So overall right now, I do like gold. As I mentioned earlier, we loaded up on positions after non-farm payroll. We have positions on between the 1310 zone now up towards the 1330 zone is where we've had an opportunity to add onto trades. It was a really nice move actually over non-farm payroll. We've got longer term positions on gold as well, but this was an opportunity to add recently. We've come back down for a retest of the lower end of this trend channel that has found support on a number of occasions, going back to non-farm payrolls at the beginning of May, which was the worst in over 6 years. Then we found support earlier on in June, well, actually at the end of June, beginning of July, off the back of Brexit. And again, we found support at the lower end of this zone. Now, if we were to see gold break down today, if it can't penetrate 1352, if it just doesn't have the legs to do it, I would look at a move back towards the 1325 to 1335 as an opportunity. Also, to look for a buy at that zone. We've had significant support over the last week for gold. We've moved already 500 points to the upside. It's holding on pretty well here at 1345. So if we can break above 1352, that could be the catalyst to just take out some of the sell shorts in the market. You will see essentially short covering above that zone. I would expect to pop higher. If you can take out 1360, which was the resistance throughout the whole of August, then we are up and running, and gold has an opportunity to actually get back up towards the 2016 highs and 2-year highs as well here. So that is what I would look at the moment for gold. So short-term view, event area is 1352. We need to break above that level in order to pop higher for a run up towards the 1375 zone. That's the short-term view. The longer-term view, we've come off the back of non-farm payrolls here around the 1300 level at the moment. It does make it more difficult for the Federal Reserve to go ahead with an interest rate hike at the September FOMC statement. There's been quite a lot of negative data which has come out recently. Look at the US dollar. US dollar got hammered. So this is where we are sat in the context of the US dollar at the moment. We've broken down over the last week following on from non-farm payrolls. It's not looking as good for the US dollar right now. I would personally like to see the US dollar move down to the 94 zone. Whether it does or not, we shall see, but that would be nice for certainly our positions right now if it did continue to break down further. But we need to watch gold, silver, other commodities into the close today. But right now, I do like the current levels for gold. I wouldn't personally, in terms of entering a new position here with gold, I wouldn't enter right at this level. We've got much earlier entries on gold right now. But what I can tell you is if you have existing positions, if gold can breach above 1352, we're up and away. We're up and running. But of course, that's down to your discretion, your trading strategies, however you trade. You might be trading with really tight stop losses here. You could probably take advantage of a breakout trade if gold breaks above the 1352 zone. What I wouldn't do here is I wouldn't be shorting gold. So personally, I wouldn't be selling gold at this level at the moment. We're up over 27% so far this year. Good momentum over the last week here. Gold's already moved over 500 points to the upside. The ECB hasn't really caused any sort of a shakeout. Previously, we have seen some major moves on gold on ECB statements and Mario Draghi speaking. We've not really got that today. You can see the channels which are providing support for gold right now. So I do favor the price holding around these levels, or even if we pull back, I would suggest we've got limited downside. Could be a better opportunity to add to a position between 1325 to 1335 zone. So that's what we're looking at on gold right now. Okay, fantastic. So what I'll do, guys, I'll talk you through our portfolio performance over the last week, our trading performance update using our exclusive research-driven strategies. So first of all, we did take advantage of a breakout trade on gold from last week's non-farm payroll, which has worked out very nicely indeed. Just exiting that position after the huge surge we got to the upside on Tuesday, right from the lower end of the trend channel. We've continued to maintain positions on gold, and non-farm payrolls gave us another opportunity here to ride right off that 1300 support zone, which was quite a tight risk to reward, where we had underlying levels around the 1293 level as stop loss zones, and that was a great trading opportunity. Also, WTI crude oil, on the back of news on Wednesday, we came pretty tight here on the 4-hour timeframes for an opportunity to ride a breakout back towards its resistance channel, the upper end of this pennant as well, for a 310-point swing trade. We got gifted that pretty quickly, actually. So we came out of that trade fairly quickly with a 310-point gain, although oil might be able to break out again towards the 49 level if the oil inventories today do cause a breakout for oil. We'll be watching that carefully, which is due to come out in 1 hour 20 minutes. Normally oil inventories are on Wednesdays. There was a bank holiday for Labor Day in America on Monday, so the oil inventories are 1 day later today, and they are 30 minutes later as well, so at 4 o'clock London time. Okay, so on that note, if you like what we talked about today and you would like access to our trade setups, our trade ideas shared with you, ready to implement for instant results, you can get exclusive access to the private members live trading room. All you need to do is go to www.jointhegoldandsilverclub.com. Once you've completed the application form, we will get in touch with you ASAP. Okay, so it's www.jointhegoldandsilverclub.com. Complete the application form, and we will get in touch with you ASAP. What does it include? What do you get by being a member of the Gold and Silver Club? Well, whether you're a new trader and you're looking to develop a solid understanding of the markets and fast track your results, or even if you're an experienced trader and you just want to take your trading to really that next level, the private members live trading room, it's definitely for you. It includes the following. You get live trading room webinars. So essentially, you get access to our exclusive live trading room webinars where you can watch the Gold and Silver Club expert traders analyze the commodity markets right in front of you, pick out highly profitable trade setups. We share the exact entry, exit points, profit, stop loss targets, walk you through our live trading room ideas ready to implement. You also get access to our trade notifications. So via email, SMS, real-time notifications, which alert you when to enter a trade. All of those include the exact details of where we enter, exit, place our stop loss. All of our trade setups are sent out in advance notice to ensure you have plenty of time to get into the positions at the best possible price. And of course, you get access to our commodity research and market insights. So private members get exclusive access to our proprietary trading research and market insights to help you boost your win rate and ensure you're on the right side of trades. Our trading research is there to give you the ultimate edge in the commodity markets to fast track your results. So with that, everything that you get by being a member includes exclusive weekly live trading room webinars, live trade setups ready to implement for instant results, real-time trade notifications by email, SMS. You get exact details of where to enter, exit, place your stop loss, weekly trading plan with a watch list of trade ideas for the week ahead, live trade support and institutional level trading research, and commodity insights to give you the ultimate edge in the market. So again, to get exclusive access to our private members live trading room, all you need to do is go to www.jointhegoldensilverclub.com. Once you've completed the application form, we will get in touch with you ASAP. Okay, so fantastic. So with that, guys, that brings us to an end of today's session. Thanks for all the questions and contributions, guys. That's fantastic. And with that, I guess I wish you all good trading, guys. All the best. We will speak to you very soon. And as always, I thoroughly look forward to working with those of you who will be making an application and joining us at the Gold and Silver Club. Okay, guys, take care and speak soon. Thanks, everyone. All the best. Bye-bye.